Hey everyone, it's Friday. We're into the last week of July, and we want to try to keep everything with these little kind of impromptu discussions focused around like a good, strong foundation. And precious metals is it. I've said it before. Even when I was younger at Merrill Lynch, it seemed so boring. Anybody that looked at gold and silver, and I hear the same complaints now from the younger generation. I get it. I believe me, I get it. But I will kind of state the obvious fact that central banks look to precious metals, especially in times of chaos. That has certainly been the case as far as data. We don't see it as much in the West. They don't do it nearly as much in the West. There's lots of reasons for it, and that would be a whole separate conversation. I would suggest that you should hedge your bet on a number of factors. One, it is a place for safety amidst chaos. I would argue that regardless of whatever events happen with elections coming into, there's chaos and work to be done regardless of whoever wins. So precious metals will play a key role. Never mind the fact that the US dollar is arguably under threat. And I've got something else I want to tie in here in regards to this too, because of course we sometimes think the BRICS play as being very precious metals backed, potentially, like that's kind of the rumor, and they'll have some announcements in November, and that perhaps the West is more crypto based and kind of Bitcoin, and that you could easily make an argument for that. But I came across a podcast that made the claim, and I haven't been able to verify it, so I hate kind of, but I'm going to put this out there because maybe someone can reach out to me and tell me. But they'd said that with the Bank of International Settlements, that banks would accept Bitcoin or crypto, specific ones, as assets, no problem, and count that towards the assets of the bank, but that they would have to be 100% backed by US dollars. And at first I thought, oh, well, that's counterintuitive. Why would you consider it an asset, but it has to be 100% backed by US dollar? I thought, oh no, that's actually really bright, because that would then enforce strengthening the US dollar moving forward. And your thoughts on that alone, just what were your thoughts on if they were to tie that together? Very interesting strategy as far as the US is concerned. And what your thoughts just on that alone, and if if that is being proposed, that'd be great. I'm going to do some research this weekend on that as well. But it's interesting because it does tie into that flight to safety, the dollar kind of story, the brick story, and especially like when we're talking gold a lot. Silver today, we're kind of focusing a bit more on silver. There is that kind of ratio that people expect with silver, that it should do better, but it's come under a lot of pressure. And for those that don't follow silver as much, 60% of silver is used like industrially, and a significant part of that is for solar panels. There has been a huge push in the last couple of years, massive support by the U.S. government, and funds to kind of buoy that market as the U.S. tried to compete against Chinese solar panel makers. And the level of it was a blistering amount of solar panel creation in China. And part of it is they've met a kind of a bottleneck here. And there's, last year China expanded its solar fleet by 55%. And that continued for the first couple months of 2024. But it has dropped significantly, about 32%, a big slowdown. And there's been threats of recession and global recession. And depending on whatever narrative you like, if you think that the U.S. has got the best economy it's ever had, you're probably one way politically leaning. If you think that inflation has destroyed the average person's way of life and made life tougher, you're probably leaning a different way. And we try to avoid a lot of that as much as possible to smooth out the extremes. I would say that, yes, the billionaires have done exceptionally well lately in the last 4 or 5 years, with the the tech kind of plays, with the support from government, money, but the people have been hurt exceptionally hard. So that's like 99% of the population has been hit, and whether that's Canada or the U.S., the West in general, we're not used to that hardship. And people will liken it to the 80s, where it went for years. The 70s had a big pullback as well. And this will have to continue for a while. I mean, you can't print trillions and trillions and trillions of dollars and then also into areas that you're not getting a return on, really, like because you're doing it for social causes and a social ideology. There isn't a return on investment. The return on investment is you're saying that the environment will be better. It's very hard to quantify that as much ESG as you want to put into it. So there's issues moving ahead. I think that's I've said before, and it's going to continue. It's hard to predict. There's so many factors going on right now that are truly insane. The wars that are continuing, the wars that are kind of brewing. There's also the threat of of a World War III, and whether that you believe that it's a distraction or if it's real. Like we even see, that there has been a lot of contact from Russia and China in Cuba. Today, there was contact, some fighter jets off the coast of Alaska. And that doesn't mean anything other than there's some flexing going on back and forth. This it's kind of like Top Gun kind of thing when you're in our airspace. And it's just that's being heightened and we're seeing it a bit more because things are tense. And we've always said, you must be careful, specifically about China in particular. But at the same time, the best way to smooth out these things is stability. So if we could get the U.S. to be stable, to become kind of respected and more powerful, would be helpful. And also just trade. We have to have trade. Now, at the same time, I agree with a lot of the Biden administration to build up U.S. industrialization, 100% for it. Infrastructure, build out not only the chips and whatnot. All of this, I'm mentioning it because that requires a ton of silver. In particular, there is gold in industry as well, but not to the same extent. I mean, silver is primarily like a base industrial metal that has precious metals attributes as well, which makes it very interesting. It's popped down below that 27. It's at 27.85 today. And I never try to this is where charting, technical analysis comes in very handy. Those that follow, those types of things, that's very critical to watch this. You get lots of historical data, so you can chart. I would say that for like a penny stock, it's not very useful. I mean, it's a good tool, but it's not as useful as the day-to-day. If we were watching a price of a commodity, exceptionally useful. Make a comment if you think I'm way off base or make the case for it either way. But we can look at a lot of factors, and of course, Sprott is probably one of the best places to go to look at. We showed an article there for news on anything mining related, gold, precious metals especially, and we love having that. But what I think we're really interested in looking at is this slowdown. In China, particularly because of the solar panel issue. We see even they've cut back on copper as well, shut down some of the smelter, activity because they are slowing down. And that's the problem when you are too tied to one country to make all of your goods and to produce all of the things. And I think if we continue down the path of, even if it's under hardship, but under the case that, yes, we need to bring back industry to North America. We're doing it in chips. We're doing it with some batteries, which is good. We should be doing it with a lot of mining, although that's very fractional compared to the scale of building up battery parks or EV battery stations and whatnot. Those are huge mammoth projects, and those are more glamorous than the mining. We need to see a lot of investment continue, and regardless of who wins the election and what happens, because that's going to be the main key kind of point people are looking for in the fall. There's going to have to be some work done. It's going to be great for precious metals. It's going to be good for all metals because both sides are going to still be pushing the economy just in different ways. And we're looking forward to seeing that kind of resolve itself. So hopefully we can get kind of back more in the middle. That would be a lot better place for people if we could shift things back to the middle, kind of come together, agree on big issues and disagree on that. That's fine to disagree on things. But without a doubt, we like to keep this theme of it's not sexy, it's not exciting, but gold and silver are truly, you look to see what the big banks are doing, the big brains, the big, huge countries, they're buying gold and silver. And I think to ignore it because it is not sexy, it's not glamorous, is a mistake. And we're not saying you have to put your whole portfolio in there, but it should be a portion. And you should talk to your advisor. Most advisors would tell you, a small portion should be in these types of things, in near cash and whatnot. So I'm not giving advice for you to necessarily go do yourself. Your advisor would probably tell you these are kind of basic standard things you could find if you looked up online and said, hey, what should be my portfolio split. It's just nice general common sense when you have times of chaos and stress to all factors. We've got economic stress, we've got inflation, we've got all of these things. Those are facts. I mean, you couldn't ask anyone. You take away the political leanings and all the vitriol in articles and memes and take that apart. You go, yes, the cost of living has skyrocketed enormously. Like it's huge. So having a foundation of your precious metals is a very, very good idea. And no one wants to hear that because they want to get the AI deal to get the maximum huge. But AI's had a huge run right now, and there's a bit of a pause in that to see what the next step is, the next developments are. But follow us, reach out to us, let me know what you think. We talked about a number of different things here in a bit of a rant here on a Friday, but we like to do that, especially like over the summer where it's a bit quieter, because we can kind of engage in a lot of these discussions. And now in the last 4-6 years, politics shouldn't matter that much to the economy or to your everyday lifestyle, but it has become one of the key issues because the scope and scale is way out here. Like it's not just we disagree on, it's so far apart. And I won't even go down the whether it's you believe in free speech or you don't. Like those are things that shouldn't be discussed. It's just something we have in the West, but they're being challenged. And when you have that reflects in everything. It reflects in your daily interactions. It reflects in the market. It reflects in all the things. So hopefully we'll get through some real tough times in the next months ahead to then come out the other side and simmer down again and start really pushing forward, building up industry in North America, getting critical metals to the right places, those companies that need it in North America and in the West, to build up all of this, to get clean energy, all of it. So there's a good goal at the end. And part of that good goal is having a strong foundation. So make sure, take a look at Sprott. They're always a great spot to look at. No, Sprott and Spot. If you just want to get yourself a bit more educated. And of course, hey, reach out to us anytime. We love chatting with you and we'd love to hear your thoughts. So send me a message, andrew@themarketmindset.ca. Make sure you check out these live streams that we do. And of course, if you want us to cover something, just let me know. Have a great weekend and we'll talk to you real soon.